Friday sessions are never innocent. And when a market falls quietly on a Friday, with volatility refusing to rise, it usually means positions are being carried, not closed. Today's Nifty move may look small on paper, but the intent behind this move matters far more than the points lost. Hello everyone. Welcome back to Wealth Mama. This is your detailed post-market Nifty analysis for Friday, 26th December. And since markets are now closed for the weekend, today's analysis is not just about what happened, but about what kind of market we are walking into on Monday. Nifty started the session at 26,121, attempted an early push, but failed to hold strength and gradually slipped throughout the day. The index made an intraday high near 26,144, tested a low of 26,008, and finally closed at 26,042, down nearly 100 points or 0.38%. Volumes were significantly muted, with total traded volume near 1,422 lakh shares, clearly below recent averages, confirming that today was a low participation, high-intent session. Market breadth was decisively negative, with 15 stocks advancing and 35 declining, showing that selling pressure was broad-based even without panic. Why Nifty moved like this? Globally, cues remained mixed with no fresh triggers, which usually keeps Indian markets range-bound. However, the absence of positive triggers on a Friday often leads to risk trimming, especially when the index is sitting just above a psychological round number like 26,000. Domestically, there was no major macro announcement, but the market's behavior clearly showed institutions reducing exposure in high beta and IT stocks, while selectively parking money into defensives and consumption names. Stock-specific action tells the real story. Heavyweights like TCS, Tech Mahindra, Bajaj Finance, Asian Paints, and Shriram Finance faced consistent selling pressure, dragging the index lower despite strength in a few isolated names. This indicates rotation, not liquidation, which is a very important distinction going into Monday. Sector-wise performance. IT was one of the weakest pockets today, with TCS down over 1.2% and Tech Mahindra losing more than 1.1%, clearly showing that traders did not want weekend exposure in a globally sensitive sector. Financials were mixed to weak, as private banks and NBFCs like Bajaj Finance and Shriram Finance saw profit booking, while PSU names remained relatively stable. On the positive side, consumption and defensives provided some cushion. Titan gained more than 2%, showing festive demand optimism, while Nestor India, NTPC, Cipla, and Hindalco posted modest gains, acting as safe parking zones. Top gainers of the day. Titan closed near 3,994 rupees, up over 2.1%, driven by consumption-led buying and defensive allocation ahead of the weekend. Hindalco and NTPC gained on selective accumulation, as metals and power stocks continue to attract long-term positioning. Nestle India and Cipla moved higher as defensive bets, showing that capital is not exiting the market, but hiding. On the losing side, Asian Paints and Shriram Finance led the losers, both down around 1.3 to 1.4%, as valuation-heavy names faced profit booking. Bajaj Finance lost more than 1.3%, reflecting caution in high-beta financials. TCS and Tech Mahindra declined sharply, confirming IT sector weakness ahead of the new trading week. India VIX closed near 9.15, down another 0.44%, despite the market falling nearly 100 points. This is extremely important. A falling VIX on a falling market means there is no fear yet. It suggests controlled selling and positioning for a future move, not panic exits. Historically, such conditions often lead to volatility expansion after a quiet phase, especially post-weekend. Support and resistance. The immediate support zone for Nifty lies near 26,000, which was tested today but not decisively broken. Below that, 25,930 becomes a critical level, and a breakdown there can accelerate selling. On the upside, 26,120 is the first resistance, followed by 26,200, which remains a strong supply zone unless volumes expand. These levels will decide Monday's tone. What to expect in next session? If Nifty holds above 26,000 in the first hour on Monday and VIX remains suppressed, expect a slow, range-bound recovery with stock-specific opportunities. However, if 26,000 breaks with volume, the absence of fear can quickly turn into fast downside movement towards 25,900. Monday will not reward aggressive traders. It will reward patient, level-based traders who wait for confirmation instead of prediction. Today's session was not about weakness. It was about unfinished business. The market closed the week by quietly testing commitment levels, not by creating fear. When volatility stays low and price drifts lower, it means the real decision is still pending. Go into Monday with clarity, not bias. Let the market show its hand before you commit capital. If you want structured, no-noise daily market analysis, stay connected with Wealth Maama and make sure to check the daily Nifty analysis playlist for continuous updates. We will decode Monday's move when the market opens. Till then, protect capital and respect levels.